Hello everyone and welcome back to another Behind the Hype. Behind the Hype is a regular series that we've been running at Finastra for a good number of months where we take topics in fintech and we demystify them and we look behind the hype. Today I'm very happy to be joined by a number of guests. This Behind the Hype is a special one in collaboration with Efma and Capgemini, and we're looking at the World FinTech Report and breaking down CX, a wow continuum. We are also joined by a bank and a fintech today, and we've got a jam-packed agenda. But just a few housekeeping items before we jump into it. At any point, if you want to ask a question, then just write it in the comments section. We have plenty of time later on in the discussion to go through these questions, and we'll be bringing in your questions throughout the discussion. To kick things off, I'm going to pass over to Elias from Capgemini to take us through the report findings from the World FinTech Report, and you'll be seeing Rohit and Michael a bit later. So over to you, Elias, to begin with.
Good morning, everyone, and thank you so much, Ryan, for having us today here, and thank you, Finastra, for hosting this event. I am the global head of the market intelligence at Capgemini Financial Services, and what I will share with you today is the key findings of the World FinTech Report 2020 that we released some time back, which is quite aligned with the topic of today, which is behind the hype, a wow continuum. And the way we want to put it is, as you could see here, the continuum sign with CX, and it's a never-ending process. So let's jump into it. What is our World FinTech Report and what did we mention here? The first message we said is it's about collaborating at scale with the FinTech. The title of our report is From Disruption to Maturity. And we believe that the effective collaboration between the inventive banks, the new banks of thinking, and the scale-up ecosystem is what will deliver innovation at scale. I have also provided here the fintechworldreport.com, where you can download the report and get more about the details. So 3 key messages that we reflect on into the report. The first one, banks must board the last train to relevancy. We call the train of relevancy, we call it the OpenX Express, X for experience. And the message here we are saying it's time to survive by leveraging the fintech across the whole value chain. Mentioning about the whole value chain, we have observed that the last mile is the visible result of the customer experience. By all means, all banks has been investing time, efforts in improving the last mile. But unfortunately, behind the scene, the middle and the back office operations are the one that affecting the customer perception. So if the situation is like this, it's time to act now, to act together, but also to act at scale. We've been observing forever plenty of POC between banks and fintech, and this is not what we believe is the right way. The right way is operating at scale, collaborating at scale toward an industrialized innovation, but to make that happen, we need to do it in a very structured manner. So the conclusion of the report was that once disruptor, the non-traditional players, the fintech ecosystem, have matured, it's more than time for now the banks to capitalize on the maturity that these guys bring and use it as catalyst to improve their ecosystem. But we can't today say anything without mentioning the word, what is happening when it comes to the COVID. And what we have observed is kind of a dilemma, the COVID-19 dilemma. On one side, what do we have? Whenever things goes wrong in certain environment, everybody tends to reduce the investment, and corporate is part of it. We reduce the investment, so we minimize the impact on the earnings. Great. But on the other side, COVID has revealed that there is plenty of gap into digital experience. And banks need to scale up their digital offering, either by investing, but we have seen that that will be difficult, or by partnering with the ecosystem. Finally, of the third part of this dilemma, we have the fintech ecosystem. They offer the right digitization, but they need cash to scale. The problem is if we link the green with the dark blue, there will be a problem. And this is where the vicious cycle comes, where if fintech don't get the money, they don't invest and grow into the digitalization, and the banks don't offer the right service. What if we turn this situation into a virtuous cycle, where banks, instead of investing in the fintech, which is a very expensive item and a long-term agenda, they only engage with the fintech on an operation basis. And as such, they only have to pay for the service provided. But this money will get the fintech to continue rolling, and in the same time will help the banks have a better experience. So there's an opportunity to turn a vicious circle into a virtuous one. And what is that? Well, what have we specifically seen through the pandemic? Mostly what has changed is you and I behavior. It has completely changed, and we have become a full digital channel adoption. Let's give it some numbers. 82% of the consumer don't want to visit branches. And by the way, in many countries, branches haven't opened yet. 49% have mentioned one of two customers is less likely to take a loan if it involves going to a branch. So this is an impact, a direct impact when it comes to profitability. When we look at the digital medium through mobile apps and website, it is jumping, it is going to the roof. Before COVID, less than one of two customers is saying, I want to use exclusively the digital channels. In today's 55% and growing are flipping to digital. And by the way, not only for the younger generation, across all generations, because we've been confined with for quite some time, and what was exceptional to be on a Zoom has become a normal way of interacting with the family as well as with my banker. And also look at the use of chatbot and automated voice assistant. It hadn't, before COVID, the adoption was quite small, but it is rising. And people are finding with the automated voice assistant or chatbot the best way to interact with their ecosystem. The only problem, the banks remain unprepared amid of this plunging profit and the impact of that. Very interesting. When we ask the bankers, where are you into the full digital journey? 58% of the digital journey are still broken and require at some time physical or offline efforts. Happened to me. I renegotiated a home mortgage. It went very well until February. And then at the end of February, the banker told me, I'm sending you the contract so you could sign it and send it back. I'm still waiting for the contract to reach my home. And when we ask the consumers about what has been their experience through the COVID, 1 out of 3 consumers is reporting us a better experience by switching to an alternative banking provider in the current environment. And they believe that they will continue using that. So if there is one message that comes out of that, it's more than time to innovate at scale. But innovate at scale means offering the full experience. And if you have an inadequate backend infrastructure, well, let me tell you, forget the customer-centric last mile delivery that you've been investing significantly in it. Let's look at the chart here. We see this iceberg where logically the high share of the IT budget is going into the front office. We are giving personalized experience. We believe that we are agile. We are using AI at scale. We are becoming more user-friendly and so on. Unfortunately, when we look at under the C-level in the middle and the back office, clearly there is limited investment going into manual processes, into the poor employee experience, into the legacy system, into the paper-based documentations. How many times your bank told you, drop by the branch, send me a fax, or send me by mail the paper that you have signed. While the new banks that we could see are becoming much more digital and automating the full experience. If we put some numbers next to this thing, next to the chart, what are we observing? First of all, there have been a good increase into the IT spending between 2016 and 2019, only 4%, but it's a good place to be because the amount is already huge. More interesting, the new IT is growing from 24 to 33. This is a great data point because new IT versus maintenance is becoming important. Unfortunately, when we ask the consumers about their experience, the numbers are not here. 50% of the consumers express that they don't have an integrated banking experience. I can't see my loan with my life insurance, with my retail account, and so on and so forth, and my trading pages. 58% of them can't access their server account from a single platform, the famous aggregation that we are talking about. And bottom right, the abandonment rate in the UK bank, whatever happened, is going to the roof. So there is a true challenge in terms of a better experience end to end. But what can we see on the other side of the equation? By leveraging their strengths, which we're going to look at it right after, the non-traditional players, big tech, fintech, are really moving from disruption to maturity. What are the strengths of the big tech and the challenger banks? Mobile only. They are designed to be mobile. They are really customer-centric. And how do they become customer-centric? They leverage the data. Few years back, these guys did not exist. And now, look, 2019 on both sides. Revenue, 162 million in revenue. Users, 10 million on the Revolut side. On the other side, 3.5 million in 24 European countries. Global expansion. In fact, the Revolut and the N26, as an example, are becoming the true global banks. But of course, you will always tell me, what about profitability? They don't have it, and they will get it as we go. But the opportunity for them is to become much more profitable in the time ahead of us. I am not seeing any more the presentation. Shall I continue?
Hey, Elias, your laptop internet stopped sharing. I'm actually on your second device.
Oh, I can't hear you.
Oh, no.
Sorry, Ryan, say again.
Sorry, your other laptop stopped sharing, so we switched to your second one.
Oh. So sorry for that. Let me see if I can get it back.
That's okay. Again.
And seems that I am disconnected. So sorry for that on my computer here. Surprising how one of my computer is blocking and the other one is working. Ryan, so sorry. And now you are able to see me, but you're not able to see the presentation anymore. Is that correct? I lost. Ryan, you are able to see me? Hello? 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 Hello?
Hey, you're back. I think you lost me there for a second.
Here I am. I am back.
Yes.
And I am trying to reconnect on the main screen. I am really sorry for this internet dependency that we all have now in our life.
What we can do for the meantime is we can actually...
No, I'm back right now. Here we go. And now you should be able to see me.
Yes.
Yes. Fantastic. Let me bring back my screen.
Apologies, anyone watching, for a slight interruption, but it's very entertaining to see how we work through this in real time. But we are back on track, and we have got your screen, Elias, so we'll pass it back over to you.
Fantastic. Sorry for that, everybody. So what were we saying? That we have the Revolut and the N26 that are significantly growing and becoming more and more relevant. But I'm hearing already, without you saying it, what about profitability? Profitability will come for these guys, we assume. If not, they will get bought. But clearly, with no doubt, they are really mastering the experience. But I want to bring the attention about the new players. The big tech are now mature players when it comes to finance. And if we look at Ant Financial or Amazon, we are seeing now more and more significant players into the game. And even the Goldman Sachs, the BBVA of the world are engaging with Amazon to leverage their platform. So what is the message that we want to push here? It's time to move from an open banking side to an OpenX side. What is OpenX? First, OpenX is, the definition for us is a seamless exchange of data and resources combined with an expedite product innovation delivers an improved experience for the customer. What is this improved experience for the customer? In fact, it's four paradigm that has changed. Well, while bankers sell products, consumers buy experience. While bankers leverage their assets to reach to the consumers through the network of branch and the experience of years, the new players leverage data to better engage. When bankers looks into the ownership of the whole value chain, the new players are realizing that there are some expertise here and there, and they move more into a shared access approach. And finally, while build and buy has been the way of operating for the traditional players, partnership is the way forward. So an OpenX is in fact an experience driven by data delivered through a shared access with a network of partners. And what does it mean for all of us in the banking industry? Is evolving from a universal bank where you produce everything internally and you distribute everything to a more specialized role where some of the functions in the banking could be a supplier. I produce and I give it to all of you. Other could be I'm an aggregator. I take somebody else's experiences and I offer them through my own channel in a co-branded or white label. Or the ultimum is I become an orchestrator where into my ecosystem, I invite different players. We believe that the orchestrator is a role where the Amazon of the world or the Netflix of the world will be playing much better and offering this ecosystem. So it's about identifying the strengths based that will give to each one of the players the best role into the new ecosystem. But to make that happen, we need to make sure that we are willing to collaborate at scale. And as such, we want to measure the readiness of the bankers to operate and to collaborate at scale. And we have created here the OpenX Readiness Index, which it measures the bank's readiness to collaborate at scale. To make that happen, we need to look into the people, the technology. Does the bank has the right assets to collaborate at scale? And finally, the finance to make it happen. But we also want to look at the whole moment of the collaboration, the open innovation. Who do we meet? How do we engage with that we could collaborate at scale, merge the culture of a startup with a culture of a bank to make them collaborate. And finally, the industrialization of the innovation. What have we done so far? We have already interviewed 60 banks around the world, America, their business and technology. Is the chart where we plugged in all the 60 players about how ready are you to collaborate and how many of your collaboration are at scale. Unfortunately, as you could see, very few today are ready to, where having the right people, having the right culture, having the right technology is what inhibit the innovation at scale. So for us, success required to move from an open innovation where we just get together and we do proof of concept, where the output is an industrialized innovation at scale. And to make that happen, Finastra, Efma, and Capgemini came together back in May, and we created the Financial New Tech Challenge. What is a financial new tech first? In fact, in order to move away from insurtech, fintech, regtech, and so on, we created the concept of financial new tech. And a financial new tech is a startup or a scale up providing a B2B solution for financial institution. And back in May, we announced the challenge about the opportunity for all the financial new tech to present their use cases in collaboration with banks. And I invite you to go on the fintechvisor.com, where it's a platform where you could see all the fintech registered, and you can register as well as all the banks looking to collaborate at scale. So in the challenge, we have identified also the 100 start sharing with you. These are the retail banking startup and scale up that needs to be looked at in 2021. These are the payment startup and scale up, and these are the wealth management that also are into the market. These or competing, but with no doubt, each one of these retail banking, payment, and wealth management startup and scale up can help a bank in their experience. And today we're going to to move into today's conversation. It's my honor to have on one side a banker and a scale up that has been joining and that will be joining us to converse in the next coming minutes. And it's my pleasure to have Rohit with Rohit.
Yes, thank you very much. Yes, good morning, everybody. It's about 7:30 in the evening in Dubai, where I'm based out of. I manage business banking for Mashreq Bank. Mashreq is a regional player in the Middle East. It's one of the largest private banks and the oldest private bank in the region. It's present in 9 markets outside of UAE, including the US, UK, and Hong Kong. It's a full-service bank, which includes corporate, retail, investment banking. And it's also known as one of the most innovative banks in the region. Back in the days, it was the first bank to introduce debit cards, credit cards, ATMs, consumer loans, and we pride ourselves in adopting the latest technology and trends in the banking industry. And I'm very honored to be here, and I thank Finastra and Capgemini for this.
Thank you, Rohit, for joining us today and being late for you in Dubai. And we also have Michael Jess, who is the CEO of RISQ. Michael, maybe a quick introduction.
Hi, everyone. Thanks for having me here. My name is Michael Jesse. I'm the founder of RISQ. We are a fintech focusing mainly on wholesale banking, in particular on commercial lending. We are headquartered in ADGM in Abu Dhabi, and today I will share our collaboration story between RISQ and Emirates MBD.
Thank you so much, Michael, for joining us. So what we have brought here today is Mashreq, who has collaborated with the startup, and he will tell you, Rohit will tell us the story, and Michael, who has collaborated with the bank, and who will tell us the story. And the objective is really about how can we wow the customer by the best customer experience. And please, as Ryan mentioned at the beginning, please shoot your questions, and that we will take also as we go into the conversation. And to kickstart today our roundtable, my first question would be to both of you, starting with, what are your thoughts on the effective collaboration at scale? Michael, maybe any thoughts on your side?
Yeah, thanks, Elias. I mean, I've prepared a couple of slides, and maybe Ryan can share those now. I mean, to kind of see the steps of our collaboration between us and Emirates and BD. And maybe let me jump straight in. I want to really bring this to the point. The objective of Emirates and BD was really to extend its group-wide institutional banking business, which is mainly on the FI lending internationally. And I think there were two aspects of it. The first one was really to have an all-in-one solution, meaning just one application which can handle the entire process. And I think I want to highlight the second one, that it should drastically simplify daily workload. So I think these were the two main, objectives of this project. It lasted around 4 months to go live with a full application. But let me bring this, how we solved it, to this wonderful quote from Goethe, who said, "If I had more time, I would have written you shorter letter." And I think in software terminology, this means true innovation is simplicity, and simplicity is one of our core values. And let me show you here 5 key features which really, I think, wowed Emirates and BD and also other customers. The first one I really want to highlight is, I think, something which is quite new in an enterprise application. Is what we call a kind of a Google-like smart search to find any data. And that's, I think, one of the big challenges. RISQ is a credit assessment solution, and you can see here the credit file. This is a typical idea of a credit file. So it's very hard to find this if you don't have a smart tool. So what bankers do is they call people, they make phone calls, so they waste a lot of time. So here, as said, for us, it was really easy. I mean, what is important to give this unique experience to the customer, to really use it kind of like an iPhone, very, very simple. The second one, and I think we also can claim here, it's the first one in the industry, is what we call this first menu-free enterprise application. So you can see here, you see the full screen. We don't have menus, which again, I think is uncommon in enterprise application. Actually, this makes really training and rollout very, very simple. For us and also for the customer. We rolled out RISQ to 10 different locations of Emirates and BD Group. And it also makes asset training and user adoption very, very simple. Also remember, we typically have users who didn't use our software before, they use Excel, so it has to be really, really simple. And I think the third one I want to highlight, and I think, again, it's quite unique, is we created a chat linked to a credit application. You must understand that a credit application, in case of Emirates BD goes through 8 or 10 approval steps. And there is a lot of communication required between the different departments, which sit sometimes in different, even not just buildings, but even cities or countries. So again, what happens is, the customer picks up the phone, the banker picks up the phone and writes emails, and lots of time wasted. So I refer to this as a kind of a bank's WhatsApp, which again is linked to the credit application, is fully recorded. And it also helps to solve a problem in a very simple way. Sometimes, somebody would reject the credit application because a small thing is missing. And here he can just answer this in a chat, it's stored, and he can move forward. So again, it really drives efficiency. The fourth feature, again, I think is new. We created a to-do list, which I think is quite common, but typically in an application where you have to work off task is typically timestamp driven. So we created a profitability-driven to-do list, which is linked to the RAROC, or essentially to the profitability of the transaction, meaning the higher the profitability of the transaction, the higher it will rank in the inbox of the to-do list. So again, meaning higher profitable loans can be approved faster, less profitable loans can await a bit longer. And I think the last feature I want to share is really that our application, again, this was also one key requirement of Emirates MBD and typically other customers, is that you can access the application from anywhere, anytime. Banks have beautiful applications for their customers, for their retail customers. Internet banking is quite common, but internally they have a lack of such tools. And we created, again, a multi-device capability. The relationship manager is typically 80% with the customer and not in a bank. And with our tools, he can access the data really quickly from anywhere. So that was like really 5 highlights, which I think stand out in the collaboration. I think stand out what the customer loves about us. And yeah, I mean, to summarize, I just want to pick the first one. I think we can proudly say that, and I think also Emirates MBD is very proud about that they run the entire institutional banking completely paperless, which means all is completely run end to end in our solution. Yeah, I mean, I think that's just maybe a quick way to share our collaboration. I will stop sharing my screen now, Ryan.
Thanks a lot, Michael. That was a great insight actually on what you've built and how EMBD is using it. I have a question actually for you regarding your collaboration story. Would you be able to share a bit more with us about how the actual collaboration happened? How long did it take? Did you do iterations on the product, or was your product already ready to use when you engaged with the EMBD? Any customer interviews, any kind of, really how did you work together to get into such a product?
Yeah, certainly, Shireen. So I think, of course, we are, I would say, at that time we were a startup. I would say now we can call ourselves proudly a more scale up. And I think, as Elias said, I mean, there are 2 types of banks. I think, the old school banks which try to survive, and I think the new banks who really, I would say, take also risk. And of course, we are not an IBM, we are not a Finastra, so we have to really show from the very first conversation, the value to the customer. And I think 2 things which I think stood out with Emirates MBD. I think the first one was really, they really understood that we understood deeply their lending business. So we I mean, of course, we have both, Oz and I, over 30 years of experience in this industry, but I think the knowledge we had in the industry, I think, was one which took away the risk from the bank, to engage with us. And I think the second one, what we did is, the screenshots I showed you today is obviously of a ready application, which at that time wasn't ready. But we created mock-ups, which were very similar to the end product, to really visualize to the bank how we are fixing the problem. So first, I think we engaged, they got trust because we understood, really, we really understood banking or their problem. And secondly, we could visualize from the very beginning how the final solution will look like. So they had like a vision, like, okay, this is how the end result will look like. And just to answer your last question, it only took us 4 months with a complete end-to-end integration. We built all the APIs to core banking, to treasury, to trade finance, to document management and other applications. I think it was a record project in Emirates MBD. But I think these are the ingredients I think a scale-up and the fintech should have. First, you really need to understand what you're doing. And I think secondly, you need to show the value to the bank very quickly, even if you have not everything ready. Because, we, as said, we were at that time a very small company.
Cool, thank you.
So I've got another question, but before I jump into that, I just want to give Rohit a chance to talk about your collaboration story and, from a bank's point of view, how you've gone about collaborating with fintech. And then I have a follow-up question, which is from the audience, actually.
Okay, thank you. Look, before I share the story, I have a couple of comments to offer around, the insight shared earlier. I think banks are willing to collaborate more than willing to collaborate. I think rather than compete, most banks are trying to collaborate, and competition rather than competition is the name of the game now. But a couple of things that are not well understood. The first one is that the banks are very highly regulated. So a lot of what we call as back end not being automated or front end not being fully automated is also a result of certain regulations which are very uneven across the globe. So when you look at, let's say, a Revolut, their operating environment and the regulatory environment is quite different to some of the other jurisdictions. And as they're scaling up, as they're expanding, they're also facing the same dilemma or challenge. I think the other big thing which is making the fintechs very scalable is use of the cloud. And there again, the data privacy and storage is becoming a big issue across jurisdictions, right? And as you use the cloud, where is the data being stored? Is it being stored locally? Is it being shared? Is it accessible, etc.? These are questions that the banks are grappling with and working now. Also, as the fintechs become bigger, they achieve scale. They're also running precisely the same issues that some of the banks are running into. But those are just some of the questions that are hanging in the background which the banks are trying to solve. Within Mashreq, I represent business banking, which is essentially catering to small and mid-sized companies. And we launched about 11 months ago fully digital banking, fully digital business banking proposition called as NeoBiz. And some of the aspects of NeoBiz where we collaborated with other players and aggregated is what I'd like to share. Also, in NeoBiz, we don't differentiate customers based on profitability. Our customer experience is exactly the same for every customer. So for us, every customer is equally important. Now, I'm not going to delve into aspects of what we're addressing from NeoBiz because it's a digital business bank. So I assume everyone is up to speed on that. But what were we addressing from a customer experience standpoint, and what were some of the focus elements is what we talked about. So our focus in building this was user experience, where digital account opening, how do you get a single sign-on and auto sync data? How do you avoid multiple data and documentation? So this was what we counted as our user experience. The second aspect was how do you aggregate service? So how do you create an ecosystem where you get value-added services which you either manufacture, you market, or you collaborate and get from the market? How do you deliver these in a manner which creates value through easy opt-in, not duplicating the data, delivering value to the client through better pricing? And how do you integrate your front end to get a single sign-on? And last is how do you service these aspects in line with regulations that I alluded to earlier? So through the digital platform, online, mobile, teller machines, etc., but also making sure that you are in line with the regulation. So how does this partnership approach work? Like I mentioned, it's only been 10 months for us. But from our perspective, the partnership works, or how do we deliver this partnership ecosystem to the client is that it's a digital opt-in during onboarding. Now, for a small business who's trying to set up, he or she requires, or that business requires multiple things, right? And banking is just one of them. So we've tied up with a cloud-based accounting platform called as Zoho Books, because that's one of the first things that a client or a new setup requires. So it's an accounting platform. Again, you just opt into it without any need for multiple signups. A lot of these businesses require a mobile point of sale device. And again, easier said than done. Getting a POS machine is a difficult, time-consuming tedious process, and we've just taken the pain out of this interaction by having this tie-up available to the client. Payment gateways, again, we talked about the COVID times, so most people want to sell online, and getting a payment gateway for a small business can be quite a cumbersome process. Again, the whole pain point is out of this due to platform, and the value that comes to the client is that you get it all through on a very preferential pricing. All these services you get with a preferential pricing, and the front end experience is great, the fulfillment experience is great, and that's the value that the whole partnership brings. So within this, I will just elaborate a little bit on Zoho Books, because that's an external vendor that we've got. Now, Zoho Books collaboration brings a lot of customer benefits. So it's not just a front-end marketing tie-up. Zoho Books is a cloud-based platform. It's VAT compliant, but it's got an integration using APIs with us. So it gives you a single sign-on. There's no added authentication. You can define roles the way you define them in your banking. But more importantly, you can also do automatic reconciliation. You can get real-time reports. The bank reconciliation, which can be a pain, is very, very simple. And you can get invoicing, automated payment reminders, etc., etc. And the last bit is what I mentioned, that you can get it all at a much, much better pricing. So using, if you go through NeoBiz or a Mashreq Bank, then you get 6 months free subscription from Zoho Books as a value add. So I think that's all I had to talk about from a collaboration perspective. And I think, like I mentioned, we are very open and keen for collaboration and delivering value to each and every client. So this is just one example of what's happened.
Thank you for giving that background. And I want to tie in two questions into one. So in the World FinTech Report, it talks about looking beyond the front end and looking at the back end and actually looking at those critical processes that need transforming. And we've actually had a question come in around how do banks identify which policies or what processes actually need digital transformation, and how do you go about digitizing them? So Rohit, it'd be good to hear from your end, how do you identify them processes, and then how have you've spoken about it actually, about how you've started to look at partnering. So
it's a great question. One of the difficulties that was not letting banking go forward for a while was that back-end automation was always looked at as a cost initiative. So people thought that automating operations is going to reduce cost, which I think is one way to look at it. But for Mashreq, automating the back-end is not about cost, it's about customer experience. Because when your back-end is automated, so let's say you have a front end which looks great, feels very nice, the client can really order very quickly. But if you've got a bullock cart at the back end, client experience is not going to be smooth. Because see, the client experience is not about only how the screen looks or feels. It's about how quickly does his or her need or order get fulfilled, how economically does it get fulfilled, and how quickly he or she gets information back, relayed back to. So from a straight-through processing, or STP is not about just saving cost. It's also about delivering great customer experience. I will give you a small example. Some of us live in the UAE, Dubai, which is an expat country, and sending remittance back to home country is a very normal thing to do. 5 years ago, you had to go to a money exchange company, queue up, cash in hand, take some time in the queue, send the money, and pray, because you had really no information coming back to you. The money would reach. You would actually call the recipient and ask him, whether or not you've got the money. That's not great customer experience. Today, you can send the money from your mobile. It gets delivered in an instant, and you get information back to you confirming that the remittances got delivered. Now, it's also much cheaper, by the way. Now, here the difficulty was not just that you solve it by having a great screen where a customer can give you information, but the beauty about this solution is that it gets fulfilled immediately, and then you get information back. You cannot do all of this until and unless you've got your backend automated. So it's a slightly long answer, but to answer your question specifically, the way we look at automation is we don't look at automation of front end. We look at the customer journey. So what's the journey for sending money? And we automate it end to end, from back, middle, and front. Only when the whole experience is automated, we say that, okay, we've automated this customer experience. So we are taking it journey by journey. We are not taking it between front, middle, and back. Elias, you need to unmute.
Thank you so much. I was saying, right, I love the way you put it in saying, in order for me to fulfill the end experience, I need to make sure that everything is well thought of. And I find it quite interesting. And it's not about the cost, but it's about the right investment to deliver the right experience at the end, where the result will be being profitability and loyalty of the customer. I have a question for both of you, for Rohit and Michael. We are observing the fintech, we're observing the big tech coming into our normal business. Some of the fintech, like RISQ, are enablers for the banks, and they don't compete directly with. But we're seeing big techs and we are seeing fintechs coming into fronting what we have seen coming from the N26 and others. Would love to hear how collaborating between traditional banks who have the innovation into the mindset and fintechs like RISQ are delivering the famous OpenX, the open experience that we offer to the customer. Maybe Rohit, you could give us some thoughts on what have you observed being in Mashriq and being beyond, and then we can go to Michael.
Look, I think all fintechs are a great place for innovation, and for a bank of our size and scale, which is a regional player, they play a very, very important role because they are taking specialized areas and they are innovating in these areas. Like I mentioned, no bank can say that, look, I am going to produce every product, deliver every innovation, and think of every tech change which is happening across the world on my own. So fintechs deliver this fantastic vehicle for innovation, for collaboration, and they're actually democratizing this whole change which is coming. See, the innovation that is happening in big tech or in very large banks, if the fintech players were not there, guys like Michael who are thinking about and innovating in multiple areas, a lot of this innovation will become very proprietary and it will not get democratized the way it is happening today. So I think they're a very important and major player of the new ecosystem which is developing.
Thank you. I'd like to bring up a question that we had from the audience, which is about the role that digital identity plays in terms of improving onboarding processes and the overall customer experience. Any comments on that?
Yeah, I mean, I think maybe I wanted to actually comment on the earlier question from Elias. I think is a little bit closer to our domain. Shereen, I come back maybe to this quickly at the end.
Yeah,
but
sure.
I think the role for us, because we typically serve very traditional banks, which are commercial or universal banks, have a retail business, an institutional side of the business. Two things. So we help the bank become a technology company. I think that's essentially what we do. We really try to give them a radical approach so they can really make a radical improvements and not just some tweaks or marginal improvements here. I think another aspect which sometimes also I think banks forget is where is the biggest risk and the biggest improvement. A lot of focus is now on the underbanked customer, which especially COVID will increase this. They will have less access to credit, but most of the banks make their money in commercial lending. And this, we have seen the majority of banks, especially in emerging markets, are completely run, I would say, manually on Excel is the most widely used one. So what we try to do is actually, we are not sometimes replacing an application. We are largely replacing Excel, to be honest. But we see a huge potential for banks to kind of look at their core business, which for, again, many banks is lending, and try to really bring this up to, let's say, the 20th century. Just to answer quickly your digital onboarding, and I think this plugs in very nicely to where we come on. I mean, eKYC is completely, will be the complete norm. But here, I think a lot of other entities, especially, not just UAE, other countries have to play in, like what's the unique ID, how you identify, you cannot reinvent the wheel over and over. But because we are not doing the digital onboarding, we are basically managing a credit facility. But I do think that the digital journey starts with kind of having a digital customer ID with a unique ID. And I think Mashreq is very innovative in this area. But again, we see many banks who really, don't look this end to end. But I do think you have to start from, again, onboarding the customer, and then look what the customer wants and improve this, as I said, step by step.
Yeah, Shirin, if I may add a couple of points. So digital identity for an individual customer, globally, I think the databases and the national ID is increasingly getting digitized and available for institutions to use and leverage. And I think the innovative banks in every country have started making use of it. And I can give you several examples. I think India is a great use case for using the national ID to onboard clients in a much more efficient manner than earlier. On the entity side, again, depending on which jurisdiction and what's the KYC requirement, having a shared KYC registry is something which is coming of age for institutions. In fact, Mashreq's financial.
I think we may have just lost Rohit a little bit, but I think we've got everyone else still on. Michael, are you still there?
I'm here. I can hear you.
Hopefully he will join in a second, but I'm very conscious of time, so I want to ask a couple more quick questions. So we have a question come in saying, what are some of the innovative products and or services for the SME sector that could come about as a result of the changing times with COVID-19? I want to open up this question to, maybe let's start with Elias from a Capgemini point of view. What are you seeing across the landscape? And then we can jump to Michael and Rohit if he connects back.
Mm-hmm. I think what's interesting, what we are observing into the COVID situation is every single one is really turning digital. And clearly, by all means, the consumer, you and I, are digital, but SMEs needs to convert into a business. And I loved what I've seen earlier on from Mashreq saying, we need to offer our SMB a full solution with the digital payment, the processes, the payment gateway, and so on and so forth. So the whole value chain become digital. And by all means, as we are getting used now to work from home and to order from home, the SMBs are the one that will deliver because they are agile and much more efficient in making it happen. So I see the next wave from retail to SMB turning significantly digital in the coming months. Michael, you want to take it?
How about?
Yeah, let me add one comment. I mean, I fully agree. I mean, I think COVID fast forwarded our life, I think, by 10 years. I think during the pandemic, you couldn't actually go to the branch. I mean, many bankers were just at home. They couldn't print the contract, couldn't sign it because they were used to manual processes. So we are actually, as I said, we have a complete wholesale banking suite. So of course, also for SME lending. And our journey starts on the portal. So when you're a banker, you have a business banking account, you can trigger a loan application directly from your internet banking. You don't have to go anywhere. The bank, the user can digitally generate the contracts, and you can make this a complete seamless journey. It doesn't matter where you are. And I think this will become absolutely the norm. It will have become anyway, but I think, as I said, we fast forwarded the life a little bit, I think by 10 years or so. And yeah, I mean, it has shown definitely the gaps of banking. Also, another part on SME, what we see, many banks are not profitable on SME. And there are two reasons on it. First, they do it manually. As I said, more like coming from the corporate banking, and they use the same assessment process as corporate banks. But the facility or the loan amounts are much smaller, the margin is smaller. So SME is a volume business. It has to be a volume business, have to be standardized. We are involved in a couple of initiatives. Actually, we are building an SME platform together with other stakeholders. And I think there will be a standard like open banking also for SME lending. It's not feasible that every bank basically does its own SME lending, its own assessment. It's too costly for, as I said, $100,000 loan or like. So this will change radically.
Ryan, allow me to add on that. We need to be I think for the banks, we need to look at the whole value chain of banking. Payment got disrupted years back with the PayPal, when PayPal came up. Retail banking got disrupted. SME is getting disrupted, and it will continue going forward. And I think the opportunity is today for the banking industry to realize that and to play defense where they can in terms of defending the existing business, but also play offense into the sectors where banks haven't, where fintech haven't come yet, and prohibit them to come or make them come as partners. Then I would also say that watch very carefully the big tech coming heavily, being very rich, being very global, and being very data driven. So there is a challenge coming ahead of the traditional banking.
Just a quick question that came in earlier, which I actually want to comment on myself. So to discuss the benefits of launching an all-digital bank compared to converting a traditional bank into a digital one. Just from my own perspective and what I've seen from the UK side, I know a few banks who have taken the approach, who are established banks, who have taken the approach of trying to create new, say, digital business banks from the ground up. For one of the big reasons of they can use new technology, so not be, you know, held back by legacy technology, kind of do it in a bit of a sandbox on its own, experiment. And as Rohit actually said earlier about being more customer experience led than kind of thinking about what can I do capability wise. Very conscious of time, and I know Shireen has a good question. Do you want to end with your question, Shireen?
Actually, before ending with my question, I just wanted to, as we have Rohit back with us, I wanted to ask him the same question around what innovations and what products and services do we see COVID sort of accelerating for the SME sector, just to get his perspective from Ashok Bank.
Thank you, and apologies for getting dropped off. I think, if anything, it tells us that no matter how much technology savvy we become, humans will always be around. But on a serious note, I think COVID has changed the perspective of several businesses in ways that we cannot imagine. I think having a web store, having the ability to confer remotely, less need for travel, much more openness to work from home. All these factors are getting us to realize that, and you can hear my dog barking in the background. I'm sorry about that. What it tells us is that change is something that one has to do, right? And earlier SMEs approached the banks only and only for one thing, which is they looked at lending as their prime requirement. I think from lending, they're moving on to getting a good transactional bank. From getting a good transactional bank, they are now looking at the bank being able to facilitate and help in getting them web ready, getting them ready with remote access. And there is a lot more acceptability of web in terms of net banking, in terms of mobile banking, etc., etc. So I think some of the tools, like I mentioned, which is POS machine, mobile POS, having the ability to have a payment gateway, and the whole collaboration ecosystem. People are talking about having the same experience that they get on their individual side. So the way things are changing in the commercial side is absolutely breathtaking right now.
Thank you so much, Rohit. I love that you've got a dog in the background. I would love to have seen your dog as well. I'm conscious of time, so I'm going to wrap up and say a massive thank you to everyone for joining and everyone for watching as well. We've had a few technical difficulties, but we've made it through. It's been really nice to actually hear firsthand from a bank and a fintech real stories about collaborating and also partnering with Efma and Capgemini to really dive into an aspect of the World FinTech Report, which is great to see the data and the stats behind what's going on in the industry. So thank you again for watching another Behind the Hype. We've actually got another one coming up this week on women in fintech, so feel free to join that. And we'll also be sharing a recording of this afterwards. We had that come in as a question. Yes, the recording will be available straight away afterwards. So thank you everyone for joining, and catch you later.
Thank you. Bye.
Thank you.